Hello again, and welcome to the 365 Retirement Podcast with Ryan Marston of Rubino and Liang Wealth Partners. My name is Randy Cook, and each week we sit down here with one of the team and talk about some of the issues that we know that a lot of people are wondering about because we see them every single day here at Rubino and Liang Wealth Partners, and we kind of translate that and say, okay, let's talk about that concern, and that's really what we're going to talk about today. Ryan, how are you doing?
I'm doing great, Randy. No complaints. The year's flying by.
It's almost over.
It is almost over, but gearing up for a busy end of the year here.
Yeah, and an interesting 2025. I've seen so many different predictions, about what the market is going to do under the new administration. We seem to have a very pro-business, pro-Wall Street, lower taxes, lower regulation, and Wall Street likes that kind of stuff. So maybe that money in the 401k next year is going to do well. I hope so, don't you think?
Yeah, it would be the first, a third year in a row, which we haven't seen in quite a while, it seems like, right? Other than the back and forth of the constant bouncing around in the market. But, like you said, market sentiment right now is bullish. Maybe a little bit, hopefully a little bit more normalcy next year, in the markets. But, regardless of the case, making sure you have a plan is going to be, step number one. Because, again, all predictions, sentiment isn't always accurate.
That's exactly right. And the one thing that we all want to know is even if everything goes crazy out there and the market goes down and taxes go up and inflation goes up, we need to be okay at our house in our retirement. So the main thing is the money there? And that's one of the biggest questions that people have is, how do I replace this paycheck that I've been getting all these years when I'm not working? I put this money away. How does it become my income? So that's what we're going to talk about. The people at Allianz did a study and said almost half of investors don't have an income plan for retirement. 48% are worried that they're going to have to cut back. They're going to have to live too frugally than what they wanted to enjoy their retirement. And only 27% of people report that their financial advisor even has them in an income plan. That seems like job number one, Ryan, and that just doesn't seem right at all.
It doesn't. It seems off to me because to me that is, it's step one. When you're looking at retirement, that is, step one in my head is we actually take a look at what your expenses are. Step two is we take a look at what your income sources are. And, in retirement, and we try to make sure we have enough income coming in, net income after taxes, to cover what those expenses are and expenses with inflation moving forward. Inflation will be present over a 20 to 30 year retirement, and your expenses today will not be your expenses in 10 years or 20 years from now. So making sure you have enough income coming in to cover those expenses is step one. And then from there, once that's covered, then you can get, creative and improve your, overall retirement plan and structure as much as possible. Set up your accounts allocation of your retirement accounts accordingly to where you are right now. So that is step one. And then from there, you can progress to those other things. It's not just as simple as 60%, 40%, stocks to bonds, put it in there. You got to have an income plan in retirement and make sure you cover your expenses without having to worry about a market pullback, which happens frequently. There's a 10% pullback every year. There's going to be a market correction of 20% plus probably in the next 5 years. So you want to make sure that when that happens, it doesn't mean you have to change what you're doing in retirement, but you want to have that income plan set up.
So our entire working career, it's been pretty easy. I give them time, they give me money. So most people do that. That's what it is. You work for somebody and you get a check. And so now you have to create the check. And so we're going in there with Social Security. We're going in there probably with a 401k, and maybe you've got some other assets as well. But now we need to sit down with somebody like you and say, okay, how does that become a paycheck? And when you start saying things like structured notes and dividend-paying stocks and annuities and different things that can pay us money in retirement, these are places we've never been before, Ryan, and these are all new to us.
They're all new, and all of those are income pay on the income side, right? Generating income from your 401k, because that's what we're trying to do, right, for your IRA. It is a psychological hurdle, I'd say, in going into retirement of paying yourself or drawing from your 401k because you've never done it before. And there is the unknown. So making sure that your account is set up, the structure of the account is set up. Again, whether it's an annuity that pays a guaranteed income stream, or a piece of it could be in dividend-paying stocks that have yields of 4 to 5%, or structured notes that are income-paying vehicles. So making sure those assets or your accounts are set up with assets like that give you an income stream in retirement is crucial. And then, once that's set up, you can maybe take on more risk with other assets if you have, other assets that aren't, you aren't relying on for income, more growth oriented, if that's in your DNA and risk structure. So it is a psychological hurdle of going from your working years and getting a paycheck to now, I have to start drawing from it. I don't want to overdraw. I'm afraid to draw from my 401k. I'm going to live frugally in retirement, so I don't spend too much. Well, you don't want to do that. You want to enjoy retirement, especially in early retirement. You're as young and healthy as you'll ever be. You want to travel, do all the things, enjoy grandkids, things of that nature, golf, without having to worry about how you're going to get paid next month. So you want to have a structure set up so that paycheck continues in retirement.
What's also interesting about the time that we're in right now is I learned this acronym not that long ago called TINA, and that was when interest rates were so low, they were down below 1%, and it was there is no alternative, TINA. So everybody was in the market, and that's where they were getting their money from. That's where the yield was. But, Ryan, over the last couple of years, interest rates have gone way up. We're now starting to go down a little bit, but there's still time. If somebody doesn't like the risk of the market, this is actually a very good time to have that conversation because we have interest rates now, maybe 3, maybe 4, maybe 5%, but that's still way better than we had a couple of years ago.
Absolutely right. I mean, we've taken advantage of CD rates and money market rates over the last couple of years, but those rates are starting to trend down, but still a lot higher than they were, 4 years ago. But there's alternatives to the market in, annuities and guaranteed, fixed income or fixed indexed annuities are another alternative with market protection on the downside. So depending what your DNA is, there's usually going to be something that is a right fit for you, or more often than not is going to be a right fit for you within that you don't have to lose sleep over at night. If you're worried about the market and things going, the way they're going, then there's ways of protecting your assets, but also still generating income in retirement. So that, there's plenty of options available, or there's tools in the shed, plenty of tools in the shed that you can use for income sources in retirement that you may not even be aware of. So exploring those options and seeing what might be the best fit for you and what you're most comfortable with is a crucial role of getting ready for retirement.
All right, now so pay attention, everybody. I'm going to be stat man here for just a second, okay? All right. So we know that there's that stat that says there's 10,000 baby boomers that turn 65 every day. And that doesn't mean they're all retiring at 65, but there's a lot of people that are in retirement, getting into retirement. And because of that, there is $7 trillion in money markets that have taken place since these interest rates have gone up. This is what baby boomers are doing. They're looking for income. And we are setting records every quarter for the last 4 years in annuity sales. So baby boomers want the income, and this is where they're finding it. So they're out there and they're talking to people like you, Ryan, and having these conversations.
Yeah, annuities can be a great fit. Exploring, if you're not exploring that as an option within your retirement plan to give you a guaranteed income stream, you're not doing yourself a service. It doesn't mean you have to go forward with it, but you should really explore all options. And annuities and guaranteed annuities can help alleviate risk in retirement, give you more income on top of that Social Security. It could help give you that income on top of Social Security that allows you to take on more risk with other assets in retirement. So annuities can be a great fit in retirement. And if you're not exploring what different options, what's available within that market, you're not doing yourself a service in retirement.
Well, if there were 10 ways that you could have income in retirement, wouldn't you want to explore all 10 and see what's works for you? Well, give us a call. We'll do just that. We set up a 15-minute introductory call. That's kind of where this whole thing starts. You can go to our website, which is 365retirement.com. There's a button there that says talk to an advisor. Set up a time that you could talk to someone like Ryan. And during that 15 minutes, Ryan, what actually happens? You're asking questions. They're asking questions. What's happening?
Absolutely. So right off the bat, I'll introduce myself and go through a little bit of a process and see if there's any questions before we get started. Any questions that prospect has for me out of the gate, right? Mm-hmm. And more often than not they will, and then I'll explain who we are as a company, what we do as a company from there, and where we might be able to help that prospect, or at least go over any solutions we may have to those problems. So it truly is just a 15-minute call that you can explore what we have to offer, maybe ask some questions about your specific situation, and then from there, see if it's a right fit at that end of the call, and then maybe proceed to a little more in-depth consultation, get more fact-finding from there, and then go over, go over your current situation and see if we can improve that current situation after that.
Well, a lot of people will have somebody through their lives that help them with their money. It could be a tax person. It could be a financial advisor of some type. Could be a broker. And most of that is all geared toward growth. And that's what you need when you're in your 20s and your 30s and your 40s and your 50s. But when you get into your 60s, you're going to need somebody who specializes in the retirement area. Ryan has talked about, working your way up the mountain. And then when you get up there and you plant your flag and it says retire and you get your gold watch and you're walking away, now you get down the mountain. And the skills that you need to get down the mountain are a little different than the skills that you needed going up the mountain. We would love to be able to have that conversation with you. Give us a call. Give us a look on our website, 365retirement.com. You can start right there and get that 15-minute introductory call going today. We thank you so much for watching, and we hope you'll join us again here on the 365 Retirement Podcast.